Money is no longer just paper, metal, or numbers glowing on screens. It is a weapon, a map, a system of control. And somewhere in the shadows of global economics, an invisible empire decides its flow. This empire has no flag, no capital city, no elections. Its power is not claimed. It is enforced through markets, institutions, and the silent obedience of nations dependent on the global financial network. From Wall Street skyscrapers to Swiss vaults, from central bank boardrooms to data centers humming beneath the earth, a single question echoes through history: who truly controls the world's money? To answer it, we must go back, deep into the 20th century, where the foundations of this invisible empire were laid. The story begins with chaos, countries drowning in war, currencies collapsing, and a desperate world searching for stability. But stability always has a price, and those who offer it rarely do so without shaping the rules. This is the story of how control was taken, guarded. To understand the architecture of global monetary control, we travel back to July 1944, Bretton Woods. A world exhausted by war gathered to rebuild. But the reconstruction was not simply economic. It was strategic. The United States arrived not as a participant, but as the architect. 2/3 of the world's gold sat in its vaults. Its factories were untouched. Its economy was thriving. No nation could afford to disagree. In a remote hotel surrounded by mountains, delegates signed an agreement that crowned the U.S. dollar as the world's reserve currency. Every major currency would now be tied to the dollar, and the dollar to gold. A perfect trap disguised as global cooperation. The IMF and World Bank were created to help nations grow, but their policies steered economies back toward the same source: Washington. With the stroke of a pen, the United States secured influence over every global transaction, every loan, every import, every debt negotiation. Bretton Woods wasn't a treaty. It was a blueprint for a new era, one in which the dollar became the gravitational center of the global economy. And soon the anchor holding it all together would be severed. By the late 1960s, the system was cracking. America was spending far more than it could justify. Funding wars, expansion, and global dominance, foreign nations began demanding gold in exchange for their dollars. And the U.S. was running out. August 15th, 1971. President Nixon appeared on television and announced an unprecedented move. The United States would no longer convert dollars to gold. The world's financial anchor was gone. Currencies were no longer tied to anything real. Money became an idea, a promise backed only by trust in governments and central banks. A new weapon had been born: fiat money. The dollar should have collapsed. Instead, it became even more dominant. Because now America could print unlimited currency to fund its power. Countries around the world had no choice but to use the dollar for trade, oil, banking, and debt. Nixon didn't just end the gold standard. He transformed money into a tool controlled by policymakers rather than resources. A tool that could be expanded, manipulated, or weaponized. The rules had changed, and those who understood the new game rose to unprecedented power. After the gold standard fell, the U.S. needed a new foundation for dollar dominance. It found one in the Middle East: oil. In 1974, a secret agreement was forged with Saudi Arabia. All global oil sales would be priced in U.S. dollars. In return, America would offer protection, weapons, and political support. The petrodollar was born. Suddenly, every country, from Europe to Asia, needed dollars. To power their economies, demand skyrocketed. The dollar became the bloodstream of global energy and trade. U.S. Treasury bonds became the safest place for oil-rich nations to store their profits. The cycle was perfect. Oil sold in dollars. dollars recycled into U.S. debt. U.S. debt funded American dominance. This system ensured two things. 1. Global dependence on the dollar. 2. Permanent demand for American financial assets. The petrodollar turned the U.S. into the financial center of the world, without needing gold, without needing a balanced budget, and without needing permission from anyone money had become geopolitical. And oil was its new anchor, but anchors can break. And challengers were on the horizon. As the dollar strengthened globally, Wall Street transformed domestically. What was once a market became a machine, one engineered for profit, influence, and control. During the 1980s and 1990s, deregulation unleashed a new era. Banks merged, new financial products emerged. Investment giants gained unprecedented power. Wall Street no longer followed the economy. It steered it. Derivatives, leverage buyouts, junk bonds. The world of finance became increasingly complex, deliberately opaque. A small circle of banks and hedge funds began influencing currencies, interest rates, and even entire national economies. The financial elite discovered a secret. Wealth wasn't just made by participating in markets. It was made by designing them when crises hit. From Latin America to Asia, Wall Street was there, ready to profit from chaos. A new empire was rising within the empire. One where decisions made in a single Manhattan skyscraper could ripple across continents. But their power came with a risk. A storm was forming. A crisis that would expose just how fragile this system truly was. In 2008, the global financial system cracked open. Years of unchecked risk, fraudulent mortgages, and engineered speculation triggered the world's worst economic crisis since the Great Depression. Banks collapsed. Businesses failed. Millions lost homes, jobs, and savings. But something strange happened. The institutions responsible for the disaster were not punished. They were rescued. Governments printed trillions. Central banks slashed interest rates to zero. The system rebuilt itself around the very actors who broke it. The message was clear. Too big to fail meant too powerful to challenge. The crisis revealed the truth. Money was no longer governed by markets. It was governed by central banks. An unelected group of policymakers now controlled the fate of global currencies, inflation, and interest rates. The invisible empire had become visible, and it was stronger than ever, but a new force was rising. One born not in banks, but in algorithms. Bitcoin, blockchain, crypto. In 2009, while the world tried to recover from financial collapse, a mysterious figure named Satoshi Nakamoto released a technology that threatened the entire system, a currency with no central bank. No government, no gatekeepers. For the first time, money could exist outside the empire. Crypto offered decentralization, transparency, and escape from inflationary policies. It terrified governments and intrigued them. Soon, Silicon Valley joined the game. Digital wallets, payment platforms, fintech startups, all racing to redefine money. The world was entering a new age, one where financial power could shift from institutions to code. But empires do not fall quietly. And those who control the world's money were not prepared to surrender. While the West focused on crisis and digital innovation, China was executing a long-term plan. The creation of the digital yuan, the world's first major central bank digital currency, was not a technological experiment. It was a geopolitical weapon. A currency fully trackable, programmable, and controllable. A system designed to bypass the dollar and reshape global trade. China invested in Africa, built infrastructure across Asia, and expanded influence through the Belt and Road Initiative, always using its own currency. For the first time in decades, the dollar had a real challenger. A new question emerged. Would the future of money be free and decentralized, or monitored and centralized? The battle for global currency dominance had officially begun. As nations watched China's rise and crypto's expansion, central banks around the world made their move: central bank digital currencies. Programmable money controlled at the highest level, CBDCs promise efficiency, speed, and modernization. But they also promise something else: control. Governments could hypothetically track every transaction, limit how money is spent, or even deactivate funds with a keystroke. The invisible empire was evolving, merging traditional finance with digital oversight. The world stood at a crossroads. Would people trade privacy for convenience? Would nations trade independence for stability? The future was no longer a question of economics. It was a question of power. After a century of wars, agreements, crises, and innovations, we return to the beginning. Who controls the world's money? Is it governments, central banks, Wall Street, oil nations, tech companies, or the algorithms quietly rewriting the rules? The truth is more complex. No single force controls the world's money, but many forces compete to shape it. Money has become a battlefield, a global struggle between nations, institutions, and technologies. As the world transitions into a digital era, the real question is not who controls money today, but who will control it tomorrow, because in a world where money is power, the future belongs to whoever writes the code.